Hi everyone, I'm Betty with Stewart Title, and I am excited to present another episode from our video series. Today we are going to be talking to two awesome mortgage professionals that will be sharing some really great information that's super relevant with what's going on today, and definitely information that you need to know if you are either a buyer looking for a home and you're going to need a mortgage, or you're a homeowner and you're trying to figure out how to navigate through this. These two will be able to answer some questions for you that you probably have been thinking about. So first, we're going to introduce, we have two with us today. They're each going to introduce themselves and share a little bit about themselves and their background, and then we'll get into the questions. So take it away, Wade.
Oh, sure. So Wade Betts with Nexa Mortgage, 14-year industry veteran. I've helped thousands of families in my career, and I'm looking forward to helping more as the future kind of unfolds. But my specialty, I don't know if you can see in the camera, military mortgage boot camp. I'm an instructor for them. It's my passion to help veterans, and it's just a very interesting time in our market right now. But we're looking to help more families just like Stewart, and be honored to do so.
Thank you, Wade. Jenny?
Yeah, welcome.
I am Jenny Goddard. I work at First Bank. I have been there about 5 years, but in the industry going on 17. And one of the things I love about working at First Bank is the diversity of the products that we offer. Portfolio lending, our kind of feather in our cap is the bridge loan that we offer. And so I love being able to help educate my buyers on all those different options, helping them understand pros and cons of all the different scenarios that they could qualify for, and then of course helping all of our realtors out with educating them as well.
So awesome. So thank you. Let's dive right in. So the first thing we're going to talk about, just really give us a quick recap of what you're hearing, what's out there. Give us some advice and some wisdom so that we can just kind of understand what we're hearing about. So Wade, can you give us a quick little summary?
So the market right now is in a very interesting spot. So thankfully that the market was very, very healthy prior to COVID-19. But make no mistake, it has wreaked some havoc with everything. Different lenders are handling it differently. One of the things that I noticed, because I'm a broker and I've got access to 70 different lenders, pretty much on a daily basis, I'm getting some kind of notification about either these days, some of the overlays are relaxing, but for a while there, it was multiple times a day. Lending was tightening. And we're only just now starting to see some of those overlays, which basically means some restrictions that lenders place on different mortgage products. Those are just now starting to ease off, but it has really had an impact on the number of lenders that have raised their credit minimums for different products. Thankfully, I'm able to kind of pivot, but your options are limited depending on your situation. And sometimes we're kind of having to hold our nose and just kind of bear it because the market, it just isn't cooperating. But it's definitely a pandemic that is causing these issues. And I cannot be more grateful that our industry was on such solid footing heading into this, because we're going to come out okay. But if that wasn't the case, it would be much uglier than it already is. So that's my 2 cents on the market right now.
Yes,
and it'll get better as time goes on.
Also, and let me just mention real quick, the information that they're sharing today, even though we are currently in the North Texas area, this information is relevant and applies to every market. So definitely, if you're from, if you want to share this information, we'll be posting this, of course, on social media. So if you want to share the video with other people in other states, other regions, other markets, what have you, that is okay. You can do that and it still applies. So Jenny, give us your snapshot.
I couldn't agree more with Wade. He's exactly right. And I think for me personally, the thing I see the most, and Wade, you've probably done the same, it's our government programs a lot of times that I see being impacted so much. The lender restrictions for credit scores below 680 have all but gone away just about, except for maybe our down payment assistance type programs. They still offer some of those solutions. They just, tighten up the credit scores or tighten up now debt ratios. So you just can't buy as much house maybe as you could before temporarily. But I, I too am very, very thankful that we're able to still offer solutions for those buyers. So it just may cause some to have to put the search on hold, but more and more now what I'm seeing is it just means they really need to be prepared. They need to get their pre-qualification, pre-approvals done ahead of time so there aren't any surprises, because if they got qualified even 2 months ago, the terms of that approval may not hold anymore. So worth staying in touch with your lender.
Yep, and actually that leads us into one of the questions, which we're just going to go right into it, is advice for buyers. So, sometimes people start their search 6 to 12 months in advance. They're starting to talk to a realtor. They're starting to get their ducks in a row. And if they started this search more than, 6 weeks ago, things have changed. So what would be your advice? And let's start with Wade on this one. Your advice for those buyers that are out there and they're wanting to kind of get the ball rolling, but they need to know the expectations and what they should prepare for.
So the advice I would give to a buyer that's trying to get into the market is get your ducks in a row early. Most pre-approvals are good for how long a credit report is valid for, but once you get that hard work done, usually it's not a problem to just maintain that as the pay stubs or bank statements, for example, expire. But if, depending on what your profession is, if you've been impacted by COVID, that factors in. So I had a handful of pre-approvals when all this shelter in place hit, that I had to go through and have tough conversations with people because they were salon owners now that couldn't work, or they were furloughed, no job, no loan. And then there's the forbearance issue, which we'll get into here in a bit as well. But my point is just communicate. That's a two-way street with your lender. If you're making financial decisions, they need to be part of those conversations, because even though it might not be a big deal to you, frankly, it could be very impactful for your financing and could be the difference between you getting a home and you not getting home. So I would just say communicate, and that's a two-way street. So that way everyone's on the same page, and then just be prepared to be a little bit flexible, because at least with my clients, what I'm telling them is, I'm your airplane captain and I promise to land you safely in your new home. Okay. I've done this thousands of times. And what I would normally say is, we might run into some turbulence, but right now, even easy deals are not easy. There's challenges to get everything across the finish line. And so if you follow my in-flight instructions, we'll land safely. If you don't, you could end up crashing to the side of a snowy mountain. I'm just saying. So just follow my instructions, follow my lead, and everything's going to work out just fine. That's why you partner with experts like Jenny and I, so that you can actually close on what you're wanting to close on.
Exactly. Yeah. It does make a difference, the people that you partner with, whether that's choosing a realtor, choosing your lender partner, choosing the right title company. All of this is so important to get you to the closing table and keys in hand. That is hugely important. So Jenny, is there anything you want to add about that advice to buyers?
I mean, Wade said it perfectly. Everything you said is exactly true. And I love your analogy. That's awesome. Yeah. It's so true.
I'll be using that. Thank you.
Right. It's so true though. So yeah, we're always cautioning them, of course, about, don't apply for more credit. Don't do this, don't do that. And right now it's really, unfortunately, the job situation is what, is affecting folks. And it could just be that, reduction of hours that affects them from being able to buy all of a sudden, things like that. So communication is absolutely key.
Totally agree. And when in doubt, over communicate, right? I feel like it's never, especially in a situation like this, whether it's, first time home buyer or this is their 10th one, it doesn't matter. Communication. Okay, so the next one, now we're going to kind of turn it around. Now we want to talk about homeowners. So if you are a homeowner that's watching this and you are trying to figure out what to do, whatever situation you're in, what advice, Wade and Jenny, can you offer to a homeowner? It really, I know it's a case by case, depends on what's going on with the job situation, but what would you say is probably the best avenue? A couple tips. Let's start with Wade.
So I would still say plan early. There would be nothing worse, in my opinion, than you actually getting your house under contract and then not realizing that you don't qualify. Because people that were even having conversations with us in January and February, the guidelines are different now. So just because you think it's not going to be a problem to get pre-approved might not be the case. So I would still start early, get your ducks in a row that way. And then as a home seller, just be aware that there's a lot of turmoil in the mortgage industry right now, and be prepared to be flexible. It kills me to say this, with your closing date. So there are closing dates being blown left and right now, or sometimes deals falling apart very late in the game because lenders have been tightening their guidelines and not retroactively grandfathering in people that are already in the process. So just be flexible. I'm doing a lot of rescue deals right now, which is a very sad thing to have to be involved in, but it's just, as a seller, just be aware there's a lot of turmoil right now, and just have a contingency plan, essentially. That'd be my advice.
And to piggyback on that, I would say it's okay to ask your listing agent to communicate and get information from a loan officer. A lot of, I can't tell you how many listing agents I talk to, and they're like, I've never had a loan officer call me or talk to me or help me understand. And that's what we mean about communication. You know, it's just as essential for me to communicate to my buyer's agent as it is the listing agent. So you really, as the seller, would have every right to make sure that your listing agent is kept in the loop and knows what's going on with that buyer's approval.
And to add to that, I recently heard, which, you know, these are the scary stories that nobody wants to talk about. I recently heard about a closing that didn't happen, although they were at the table signing and the lender couldn't fund. So not only was the communication clearly didn't happen to the buyer, but it didn't happen to the seller and the listing agent either. So just another point of why everybody should be communicating, you know, not at the closing table, but prior to would be lovely. That would be great. Okay, so the next topic is forbearance. So I have seen posts left and right on LinkedIn, on Facebook. People are talking about forbearance and doing this and doing that. So I really want to hear from y'all, your perspective and your advice when somebody is hearing this. Really, what is the best approach? Wade, let's start with you.
So it is a touchy subject because it's a lot of unintended consequences from some of the policies out of Washington, frankly. So not picking sides here, but the fact is the CARES Act allows any homeowner the ability to have forbearance on their account for up to for 3 to 12 months without any proof of hardship. And so millions and millions of homeowners have taken advantage of this because there wasn't a downside in their eyes. But what has been a lot of confusion, they weren't told or it wasn't clear when they have to pay that money back. So initially it was, you're gonna have to pay the lump sum back at the end of the first forbearance period, or then you have to go late to even get a modification. There was all this wild speculation. Well, literally last night, they came out with official guidance on this, and essentially it's gonna help stabilize the market. I'll be honest, I haven't dug into the details of it yet because it was a 12-page FAQ from Freddie and Fannie, but essentially it doesn't tack it on and extend the balance of their loan. It allows them to basically set that aside and pay it off over time. And it was a breath of fresh air because I was personally worried that all of these homeowners were suddenly going to have 4 lump sum payments due all at once. And if they were struggling to make their payment to start with, and now you got to hit them with all 4 all at once after the 3rd month, I mean, that was going to be a recipe for a lot of foreclosures and things like that. So I think they did the right thing here and provided clarity to the housing market. So that should help stabilize it. But people are still taking advantage of this forbearance thing without proof of hardship. So literally yesterday, I had a conversation with a client who just casually mentioned that he went into forbearance, and we were about to lock his interest rate at like all-time low rates. And I had to tell him, I'm like, did you miss your April payment, or was May the first payment that you're going to miss? And he said May was going to be the first payment that he missed. And I had to tell him, well, if you go through with that, you're not going to be able to refinance for a full 12 months. And he said, what do you mean? Because it doesn't hit your credit. I'm like, well, it doesn't affect your credit score, but there is messaging on your credit report that says forbearance, or a lot of lenders are using natural disaster verbiage. Mm-hmm. But the fact is, in order to qualify for a mortgage backed by Freddie Mac or Fannie Mae, you have to have the last 12 months payment on time. So if you've missed the last 3 or even 1 because of forbearance, it's 12 months until you can refinance again or buy a home again. There are some lenders out there that are preventing homeowners prospective borrowers from getting approval at all if any loan is in forbearance, any mortgage loan. So it is a big deal, and that is not clearly communicated to the masses. And of course, if you have a hardship, absolutely take advantage of that. But if you have the ability to pay your mortgage, you should absolutely do that, because there are definitely going to be unintended consequences that you will possibly regret in the future. So that's really my soapbox rant on that.
That's really good information. So Jenny, yeah. Can you shed a little bit more light on that too?
Yes, I mean, just to piggyback on that, it's even if I don't know with you, but I know with us, even if they made that payment, let's say they applied or were granted the forbearance, but didn't maybe miss the payment yet. The problem is if it is reporting in any way that they have a forbearance, then it's assumed they have some sort of a hardship, or there's a struggle with their income or something, and that, of course, then causes us to have to assess that risk differently. And right. So it could even prevent them from qualifying at this time, even if they didn't miss a payment. So again, the communication piece is so essential in doing, the upfront pre-qualification, pre-approval with your lender, making sure that they have all the information. I always kind of liken my job to almost an attorney. It's like we have, a case to present, and you need to give me all the facts, give me the information, all the dirty business, and let me figure out, what is pertinent information that we really need to act on. So, unfortunately, the forbearance, and for that matter, I did find out yesterday, forbearance on student loans. I mean, most folks realize student loans often are in forbearance, but my concern was, are the student loans then going to be, treated the same way? Let's say their mortgage is still paid on time, but now they've deferred their student loans. And I was at least told, no, that won't make an impact. So, deferring those for now, no problem. But ideally, keep the mortgage payments going. So, yes. If you can.
If you can, yeah, absolutely. I mean, sometimes there are those opportunities that, even though you don't have to prove the hardship, could give some people a little flexibility, and so maybe that's what their thinking is. But I totally agree. If you can make it, you should make it, because not all programs, it's not supposed to be a big blanket for everybody. Sometimes, sometimes it's being used, and then, like Wade said, it creates really unintended consequences. So if you don't have to use it, don't.
It was a big deal, because they were forcing. Well, the big picture is, when you pay your mortgage payment, it gets sent to a servicing company. So the company you pay is your servicer, and those servicers, even if you don't pay, have to forward your money or the payment to the bond investor, regardless of whether you pay or not. And so when this CARES Act came out and people started taking advantage of this forbearance, the servicers were having to forward like millions and millions and millions of dollars of payments that they weren't getting. And it was quickly putting those servicers out of business. Wow. And the government came in and put a backstop and said, look, servicers, you're only going to have to front up to 4 months of payments, and then they'll take care of the rest. But that's still a significant amount of volume. And what you're going to start seeing is escrow accounts are going to get way out of whack because you're not paying into them. So you're going to have just huge issues down the road, even for people that had the hardships and whatnot. We're not out of the woods. And I'm hearing possibilities, not confirmed, but possibilities that they're going to close the window to claim forbearance here in the very near future as well. At the end of May is what I'm hearing. as a possibility. So nothing's set in stone yet, but that would mean that if you're going to do it, you need to do it sooner rather than later. And if you're not, you're likely going to miss your chance at some point.
Right.
We'll see if that actually comes to fruition.
Yeah. So on this next question, Jenny, we're going to start with you. And I really wanted to ask you both advice for realtors. So the realtors, of course, aside from communication, because I think we've communicated that a lot, the communication piece, but what would you advise these realtors that are either working with buyers or sellers for them to be informed and for them to be able to educate their clients?
Well, I mean, again, working with a great lender and being able to communicate with them to get all of that information up front, know that their buyers really are ready to sit in the car with them and start looking for homes. You just, excuse me, I've got a dry throat. You just can't wait until you found the house anymore. You really, at this time, need to make sure that there's no surprises. And largely just, again, because of the income verification that has to get done. It's the same type of verification, but if there's, I know I've got clients with bonus or commissions, and sometimes that's scary. If they're over 25% of their bonus and commission is pay, excuse me, then they, we have to kind of look at the industry and what are they doing, and is the sales volume coming down now, or are we going to be able to still qualify it at that same rate? So it's more important than ever, for sure, to get that pre-approval done.
Right. Wade, some advice for realtors?
So it would be more of a request, and that is to be understanding of the situation. So I know every deal is precious, but the fact is the lending industry, the mortgage industry, it's in pretty unprecedented times. This is not like in '08 where, frankly, we caused our own mess. This was kind of forced upon us with policy decisions, and we're having to deal with the aftermath. And there have been more changes in the last 2 months than in my entire career, frankly. So the request would be just be understanding with the lenders that are involved in the other side of your transaction, because despite how it's going, trust me, they're doing their best. And everyone wants the deal to close. No one wants low appraisals or missed documentation or whatever the reasons are for a struggle of a deal. But my ask would be understanding, prepare your buyers and sellers that this is a turbulent market, even high credit, high down payment, good golden borrowers. It's going to be harder to do this now than it would have been just a couple of months ago. So that would be the request for the real estate community from the expectation management side. And then, of course, for the business side of your business, the lesson is prospect for more clients than you need, because your fallout is going to be higher right now than it would have been at any other time in your career. So prospect for more business than you need, because your close ratio is going to be much less. So that would be my 2 cents there.
Yep. Really, really good point on that one. Okay. So the last question on my list here, and then we'll do some final thoughts, but the last question on my list here is, we talked about interest rates earlier in the first quarter. We saw some amazing interest rates. And so there was a little bit of a kind of tick up that happened. And so where are we today? How are interest rates looking, and what can we expect? I'll start with Jenny on that one.
Okay. Rates are still fantastic. Bottom line, they really are. And it's not as volatile as it had been when we saw that dip. Same, and I'll echo what Wade said. I mean, in my almost 17 years, I've not seen in such a short period of time the volatility in the market that we've seen. And so it's right now, things are good. Rates are great. There's, I think a lot of opportunity still for people to get their refis done if they haven't yet. For sure, those are still available. I will say home equity is a little different game than it had been. So a lot of the home equity products are drying up. But again, I think as the economy starts to stabilize, we'll start to see some of the lending restrictions loosen up, and things will be back on track. But I still think it's going to be a good year for for rates, I don't see anything major coming down the pipe. What about you, Wade?
I agree. The volatility that we experienced over this last 2 months has been unprecedented. Thankfully, the Federal Reserve came in to help stabilize things. They started buying just tremendous amounts of mortgage-backed securities. And just for those of you that are watching, those are the mortgage bonds that drive the interest rate market. And they have bought billions with the B of dollars of these per day. They first started out buying $8 to $10 billion a day in mortgage bonds, and now they're just under $5 billion. So tremendous amount of federal support, and all of that still working its way through the economy. I personally think that rates are going to continue to dip into the third and fourth quarters of this year, and they should be low through next year as well. So rates hit their all-time low on March 2nd. And then, Bette, you were exactly correct. Right after that, essentially they ticked up for a couple of reasons, one of which is just the capacity issue of the mortgage industry. So right now, with where rates are, there's like $4 or $5 trillion worth of mortgages that could be refinanced. And the industry only has the capacity to handle like 1.5 to maybe 2 trillion per year. So you've got rates where trillions of dollars of mortgages could be refinanced, but we just don't have the capacity to do it. So different lenders are handling that differently. Some are keeping rates higher to manage their pipeline. Others, when they have capacity, they'll lower it real quick until they get what they need, and then they'll raise them back up. So rates, I think, as good as they are, they could be better, but I don't see a cure to the capacity issue anytime soon, because you're just going to see rates stay low for a while. So Jenny and I and Bette, we're all looking to help more families this year, and we would be honored to do so. Rates are fantastic, and if you want to see what that might look like for you, reach out to one of us, and we'd be happy to do so.
Absolutely. And of course, we'll be ready to handle your transactions at closing.
Exactly. Exactly right.
So final thoughts, we're going to wrap this up with kind of final thoughts. We've talked about a lot of really, really important things that it is important for people to be aware of what's going on. If they're looking to buy, if they're looking to sell, or if they're in an issue that, you know, they need some help with, it is so important to ask the questions and get the information you need before, and, you know, not just sit and wait, but get the information that you need. So let's do just a quick kind of final thoughts. Jenny, let's start with you on that.
Yeah, absolutely. I would say rates are great, but don't always listen to the news and think, oh, you know, they should be at 2%. So, you know, why are you quoting me 3.5? I mean, it's so important to talk to your mortgage professional and just know, you know, every single situation is different. All the different elements that make up, you know, your ability to qualify for certain rates, obviously are different from person to person. And so, don't just assume, you know, find out, do your homework, and talk to a mortgage professional so that we can help guide you in the right direction.
Wade?
So again, the message really is just kind of be aware, communicate early and often, get your ducks in a row as soon as you can, be flexible during the process. You know, I don't like having to ask you for, you know, an ounce of blood and a hair sample either, but it is a global pandemic. So I just need your understanding so I can land you safely in your new home. So the point is, rates are fantastic, but like Jenny said, at least in my world, with having access to so many different lenders, your specific situation is going to dictate what we do. So if you need to close really fast, well, then I got that lender over there, and they might not have the best pricing, but hell, you said you needed to close in 18 days, so they can do that. Whereas if you have less than perfect credit, you might need to go to one of these 3 people, and one of them has better pricing than the other, but their process is awful. 60 days to close. So your personal situation is going to dictate how a lender has to treat you and what they will recommend for you. And then you as the consumer would make the decision of what's best for your family. So again, we'd be honored to help. Stewart is a great partner. If you haven't used them before, definitely give them a try. They want to be your partner for life. And Jenny and I would love to be your lender for life.
Absolutely.
Awesome. Thank you for the plug.
Yep.
So as we recap, as we close out this episode, I just want to say again, thank you both for joining us. I'm Bette LeMay with Stewart Title, and Wade Betts is here joining us, and then Jenny Goddard. So if you have any questions, feel free. You can send us a message via Facebook, or if you have our email addresses, actually we will include my information at the bottom, and then I can send out any questions that might come my way. Catch us on our next episode, which will be sometime in mid-June. And we are excited to continue to bring to you relevant information and what's going on in the market, not only locally, but also nationwide. So we will see you again very soon. Thank you.
Thank you.
Thanks.